Welcome back. We have to cross over to the stock exchange now, where Bosun will be taking on the macroeconomic strategist at AfriInvest on current issues for investments. Bosun, back to you now. Good morning once again.
Good morning. Thank you very much. You know, this is the home of capitalism. So the entire inflation economic data will have to turn into naira and kobo for anyone who is investing in the market. So that was a very interesting conversation with Bismarck Rwani, our chief economic consultant, on the latest inflation. But of course, you know, Adedayo Bakare from AfriInvest, who is here, coming from an investment firm or investment bank traded in securities, fixed income, equities, mutual funds, will have to take the entire inflation and other macroeconomic headline stories into investment for us. And that's why he's sitting here at the Nigerian Stock Exchange on Custom Street. Good morning. It's good to have you.
Good morning. Thank you.
It all boils down to how investors trade whatever macroeconomic data that comes out. So inflation is the big elephant in the room this morning. So what's your view about these numbers if you look at the headlines and the highlights of it, as it were?
Okay. The numbers we saw in for July was, slightly better than what we saw in May and June. So as opposed to what we saw in May and June, in July we saw a downtrend, both in headline and also the month-on-month increases in inflation. So headline was down to 11.1%. That was, slower than expected, but still very, very good. And it was likely in line with our expectations. And the main driver was still food. So we saw a moderation in month-on-month increase in food. And that filtered into, the general food inflation, to which reduced to about 12.8% in year-on-year in July. So they are all, positive developments. Imported food inflation is stable. Core inflation, recorded a downtrend as well. So these are all positive news.
Inflation is a backward-looking data.
Yes.
Why does it get us excited each time it comes out? If it all happened last month, why should I be interested in it today?
Well, there's a lag, obviously. There's a lag, and for investors in markets, they are more forward-looking. So most of the numbers we're seeing currently, it has already been priced into decision-making in July, and also, of course, they take a view of what will happen for the rest of the year. So for investors in, say, fixed income and in other markets, they are more forward-looking. So, expectations for inflation, people already know, investors already know that the moderation is going to be gradual, and we might most likely not see, a single-digit inflation this year, given, upcoming elections, food insecurity in, food planting regions, anticipated increases in, say, minimum wage and other forms of stimulus.
Oh, now you touch another live wire there, the minimum wage. This news a few days ago was that the government says, Nigeria Labour Congress, don't worry, we'll be starting the new minimum wage by September. That is just about next month, isn't it?
Yes.
So we should be looking at inflation this way. If the government funds whatever they agree and put the cash behind it.
It's really a balance of factors, because don't forget, we are in the Q3. We are, to the end of Q3 now, and we're moving into Q4, and this is when you have the food harvest season. So harvest of tubers, of cereals will happen. So we a bit optimistic that the harvest season should, lead to maybe a faster moderation in food inflation, and that should up headline inflation. On the other hand, we are aware that, stimulus from government spending to, increases in minimum wage, and other forms of, election spending, insecurity risks that might even affect our harvest expectations. Those are all factors that will, determine what how inflation would likely play out in the near term.
Consumer spending traditionally go up from September. From the moment I'm paying school fees, right? Kids go back to school from September. And then we go into the end of the year, folks balancing their books, booking for holidays if you're going to be around here local, and you begin to buy whatever consumer goods, consumer things, products ahead of December because you want to time most likely market traders hiking fares.
Prices.
So spending gets a lot higher from September, October, November, and those who go on holiday early will begin to plan that. That pushes more money into the system.
Absolutely. Traditionally, we know that food is about 50% of the CPI basket. So, I mean, during the Q3, Q4, we see a moderation in food inflation. But also, I mean, 2018 is a unique year in the sense that it's a pre-election year. So a lot of activities, a lot of things are happening at the same time. So that is why really consumer spending will not traditionally rise, but there are also other factors that we think will even push it, higher.
If INEC gets is 220 billion, whenever the National Assembly sits down, right? If you increase minimum wage in September and you pop additional several hundreds of billions into the market, then your capex for 2018 budget, if you start spending, that will put 1 trillion. Oh, let's say forget the monthly FAC. If you put all of that, you're looking at 1.5 trillion.
Yes,
just something from here. Right.
Absolutely, and I mean that is what is guiding our expectations for the rest of the year. So I mean the gains we've seen, from January up to this to July, which is about maybe up to 400 basis points, reduction in inflation. We believe, I mean, that will moderate drastically in the second half of the year because of demand pressures and supply shortages as well. So all those things, the productive capacity of the economy is still currently weak. It cannot accommodate the influx of money into the system. So I mean, going forward, we expect that the moderation will be very much slower, and we will close the year at slightly around 10%. So I mean, still double digit.
Let's take inflation outlook and interest rate outlook to the market street where we are. This is where I have my MPR at 14%, and I'm seeing inflation 11.14%, and I'm looking at my treasury
at 11.
Okay, at around the same margin.
Yes.
I've seen single digit, but at least upper end of single digit. So, what does that tell me about the return on my investments in Naira bond, whether it is savings, whatever you call it, and treasury bills?
Okay, for markets in H2, most of H2, we know that apart from inflation, there are other drivers such as the emerging market and frontier market risks we've seen, since May. So for the investor, your real returns are still positive. I mean, relatively positive. I mean, when you go to, say, the longer tenures, so that is enough confidence for investors. Real returns are positive, and we believe the MPC, the CBN, is watching and tracking that closely because of the need to, continually attract, investments, foreign portfolio investments, although we believe that will be slightly, lower given the risk in the global market currently. So, for the investor, the returns are still positive, and the good thing about CBN's current stance of MPR at 14% is that it gives them, the room to, quickly adjust to whatever is going on in the markets. So as you see risks crystallize from the global market to the local market, they are more, capable to adjust, yields or interest rates.
I'm not likely to see treasury yields at 14%. Well, my MPR is at 14%. And if central bank, if the MPC decides, at least within the next 2 meetings before December or not before December, to hike rate again, which means my yield is still well below my MPR.
For us, we are not that hawkish, so we believe we believe rates will remain stable at 14%. There's a lot of room at 14% for the CBN to still adjust rates within the market.
To manage liquidity?
Yes, to manage liquidity.
Within the 14%?
Using the OMO tools, and other monetary tools under its belt. So there's actually room to, still adjust rates and give returns, give positive returns to investors without increasing the MPR rate.
Is there anything in the current corporate earnings that gives an indication of something positive going on in this economy? We hear more on the pages of newspapers and in the news channels, news network, such as channels. Every day you hear more of political soundbites than economic soundbites from cabinet ministers. For example, it's been a little bit quiet out there on ERGP. I haven't heard anything about ERGP from anyone in the last 30 days, and then I can be sure of that. Less about the budget as well. So, macroeconomic space, do you think politics and policies, whatever, is crowding out everything else?
I mean, what we've seen is politics now trumps economics. I mean, because, I mean, ahead of the elections, what we've seen is the regulators, the government, attention is shifting to the elections and how they can win, how they can win the elections. So we are seeing that some delay in, normally policy making, that you will see is, been affecting the market. So there's a measure of uncertainty and instability. But fundamentally, the results we saw in Q2 were not as inspiring as we would like it to be. Results were still mixed. And what we saw, although some companies were able to record impressive earnings, what we're able to observe is that consumer spending is still weak, and consumer spending is about 60% of the GDP. So, and if that is still weak, that shows that on growth, we are less bullish about the growth outcomes we see in Q2. So going forward too, we expect that, say, fiscal spending and pre-election spending should provide a boost to GDP.
There are two things you mentioned in here, and you're the macroeconomic strategy. Electionary spending is a different thing. It's a narrow reign every 4 years, as it were. Mm-hmm. But fiscal spending is a totally different thing, which means from your budgetary plans, right?
Yes.
That goes into direct building roads and bridges, mm-hmm. and funding MDAs, whatever they have on their plans, which is submitted to the Budget and National Office. So that's a different thing entirely. We can rely on electioneering political spending
Absolutely.
As a basis for economic development.
Absolutely.
Yeah, even though some folks will take some of those money and put them in the bank or buy a new sewing machine, whatever they decide to do with it, or buy a nice suit, again, independent.
All this just points to the fact that we need to actually take steps to reflate the economy. So, like you mentioned, election spending is a temporary boost, which will
it's hot money.
Exactly, which will wear out in the coming quarters. So, and we feel there's room for growth in the economy if the fiscal authorities can actually take steps to free the economy, attract more investments into the economy, and truly unleash the productive force of the economy to return growth to levels we saw prior to the say oil shock and prior to the recession. So it all depends on the policy direction of the government.
Are you worried about the level of, as a macroeconomic strategy, are you worried about the rising level of debt? National debt.
National debt is worrying, and one of the reasons we think is worrying at Afri Invest is because revenue...
The DMO chief says, don't be worried.
Of course. When you look at debt to GDP, we are still, at 20%, and threshold globally is around 50%. So we can say there's even, it's stable and there's room to even borrow more. But when you look at the revenue base of the economy, which is the way we service these debts and make repayments, we see that it is too weak. Nigeria is spending like...
So you are worried?
So we're worried, obviously.
We understand. We understand everyone. Well, but let's leave it at there for today. I'm sure we'll have another day to talk more about the debt level. A lot of folks are on social media talking about, I'm asking if we share the current debt, which will be my own share, and that came to about 174,000 if you share the 20-something trillion naira per one. I want to start paying on my own a little bit, I said today, hoping we don't catching up anymore there. Thank you very much. Adedayo Bakare, macroeconomic strategy from Afri Invest. Chimeze, back to you. Whatever your size of the national debt, get ready to start signing the check and pay yours. I want to start paying mine.
I've actually not thought about that, Bosun. Anyway, that was a wonderful conversation with Adedayo there. Thank you for your time. We'll take another break, and when we come back, we will look at today at the equities market. Just stay with us.